So for an investor, what are you looking at? Because I would think there's no way the Fed, and I'm not going to use the word pivot because people think pivot means that you're going to ease. I'm not talking about ease. I'm talking about stopping and waiting. That's going to be a massive catalyst, like you said, for the markets. They're going to have to pause after November and say, wait, the data from now and just to their November meeting, wait till you're seeing it today, every day that comes out. Just pull up CNBC because they love the negative headlines, right? I mean, they don't read them themselves. They just make sure they get clicks, right? So they're like, yeah, we're fine. And Leisman's like, yeah, no, the Fed's got to do their job. Inflation's high. You know, he's going to repeat exactly what it's like. Powell has his hand up his ass like a puppet. And he's like, yeah, the inflation's high. And we got to, you know, it's like, come on, man, just report like you're supposed to report. You're allowed to disagree. That's your job. Your job is to report to the people watching CNBC, not to the Fed. I don't care if you question, you raise your hand and you're first in line for the question, you know, at these meetings. I don't care about that. You know, so we have to get away to this boys club just saying, oh, this is the way it's got to be. Because this boys club is the reason why we're in this fucking mess right now, right? It's because of what they said and what they did for 18 months, even last year, inflation of 5%, saying it's transitory and just looking down and talking down to everyone saying it's transitory. Don't worry. The president going, hey, it's transitory. It's going to be transitory. It's fine. It's fine. It's fine. And now you're doing the same thing, which is as the market's crashing, rates are surging, and the housing market, people don't realize how big the housing market is when it comes to the economy, how much percentage it represents of the economy. It's huge. When people buy a house, it's massive. Even not just building it, but buying houses and the amount of things that you spend money on and things that you do and just the fees that are generated for banks and everyone involved, it's shut off. It's turned off completely. And it was turned off with rates hitting 5.5%. We're 7%, and you want to continue to raise rates. Yeah, this is what I mean. We're looking at it right now. It's September. You're talking about into next December, raising rates much, much higher than where they are right now and keeping them there for what? Over a year.
We're not even talking about ruining this Christmas like FedEx has already warned. We're talking about ruining next Christmas, Frank.
I mean, this Christmas.
Here's the thing. So after November, they have to pause because you think between now and then there will be significant inflation data that comes out that's going to show it's working, and there's going to be a lot more pain. And I say pain, not to play on there, but there's going to be a lot more announcements, a lot more press releases from companies warning, lowering guidance, laying off employees, telling people, hey.
This earnings season is going to be a disaster. And you know what? Companies are going to get a pass, just like they got a pass in COVID, like FedEx. You're going to get a pass for saying we're removing guidance. Usually when you say that, your stock goes down 25%. And that's what we even see with FedEx. It usually happens because when you have uncertainty is the death of stocks, right? When you have uncertainty in equity markets, that's what we have, uncertainty, because people aren't really, we're like, really? Is this really going to happen? I mean, you know how bad it is? So when we became bullish 2 months ago, right? And about a week or two before it bottomed, I'm not saying we're right all the time. We're wrong sometimes where we say we're wrong. But insiders were buying their stock like crazy. And you had buybacks coming in. And everyone's on the impression like, wow, okay, inflation's kind of like topping out. And the Fed's probably going to say, all right, we'll be done at 3.5 or whatever. And then the Fed was like, no way are we done. And then we got the CPI reading. And now where are we at the markets? Right now we tested lows. Would you think insiders are not buying here? And you know what's even worse? These companies with buybacks, they're not buying back their stock right now. Their stocks are down 35, 40% plus if you're in technology. They're not using those. When you announce a buyback, you actually don't have to buy back your stock. You can say, we're going to buy back $1 billion of stock, 20% of your float, and they'll buy it at the right times, right? When they seem fit, where they think it's great. Your stock is trading at yearly lows, right? I mean, you're down 40, 50% from your highs, and these guys are, this is the data, right? This is data that I have yesterday, Bank of America. They're not buying back their stock here. So if you're not buying back, if the insiders aren't buying, and then the corporations, they're not buying, the board of directors are choosing not to buy back their stock here, why the hell should you be buying here? And what's funny is that everyone's looking at these technical indicators like they mean something. All-time negative, right? Never been more negative based on, S&P oscillator and the bull-bear readings and all this stuff. You're right. Maybe we get a temporary, rise and we see the markets go up like 500 points. What do you think is going to happen? People are going to sell because the Fed's like, we are raising rates no matter what, in your face. We're going to continue through next year, and we're shrinking our balance sheet. We're going to continue to remove liquidity. We need to move more and more liquidity from the market. So every rally is going to be met with massive selling and retesting the lows. As long as the Fed continues to say we're going to raise rates, there's no reason right now to actually be buying stocks and thinking that they're cheap, because they're going to get a lot cheaper. And anyone that tells you to buy a stock because it's cheap forever. Any time in your life, if someone says you should buy it because it's cheap, sell it. You'll make more money selling it every single time. Trust me from 30 years of experience, because cheap stocks get cheaper. You don't want to say you're buying a stock, you're cheap. You want to say you're buying a stock because of the growth opportunities they have ahead of them, not because it came down to a certain level. They're trading below their sector or what the average sector for a reason. It's the management team. They're not in the right growth sectors, if you're a semiconductor or whatever. So saying that the stocks are cheap, which are not even cheap here, based on the growth that we're seeing, where earnings are negative year over year, and they're going to be negative year over year going next year as well, we should be trading at a single-digit PE, maybe at a 10 PE. And what are we trading at? 15? 16 still?
Ish, yeah.
That's based on the Fed continue to raise rates. And just sitting there and pretending like you have no... I don't know if they're pretending or they're just complete idiots. They really don't see what's going on. I mean, this is an absolute joke, and it's going to get worse. It's going to get much, much worse than it is now, and it can all be prevented if the Fed just stops and says, okay, inflation's under control. We stopped it. It's going to gradually come down. We're seeing all these companies lay off employees. So boom, you hit the number, you check the box on unemployment. Yes, you have CPI is going to remain relatively high because you idiots, you just made rentals and shelter a big part of it to keep inflation low, and it blew up in your face since rentals are up 18% last year and the year before. Right. So now you're seeing massive inflation in the CPI, but everything else, you're looking at commodities across the board. Everything is terrible right now. You have to be very, very careful because, someone who likes to recommend stocks and find ideas and watching a market that's down as much as it is, I can't tell you to buy anything here with the Fed totally 100% committed to raising rates much, much further than here, even though they're destroying sector by sector by sector. And it's going to get a lot worse if they continue.
Absolutely. And for investors, just focus on what you can control. It's going to be a tough waiting period right now. We have to wait on the Fed, et cetera, et cetera. I would look at today's price action bounces like this to get out of, or at least trim positions. So know what you own, look through your portfolio, you get a nice pop. If it's a high risk, high reward or tech or whatever, maybe look to trim some of that. You want to have cash on the sidelines, and you want to be prepared to act when the opportunity strikes. And as Frank.
Same thing. Frank, Fred, everything goes together here.
Yeah, exactly. And as Frank said, they're going to have to pause at some point. We'll have to see that. Yes, I thought it was going to happen a little earlier. I was wrong on that in the direction. It's just, it's tough right now, and I think it's great, not to pat you on the back here. I think it's good that we're just being honest with investors and not recommending shit to recommend shit. Now you got me cursing Frank. Mm-hmm. My family doesn't know I do that all the time, mostly. But the takeaway there is just control on, know what you own, use bounces to trim up positions. The Fed is telling you the roadmap. It's frustrating and it's difficult sometimes to follow it, but continue to follow that. Have cash on the sidelines because the world is not ending tomorrow. And because the world is not ending, there will be opportunity in the future, and we'll be able to take massive advantage of those across different portfolios.
And it's good, right? The whole thing was basically, ranting, being negative. It's just to see what they're doing, and they're all in this little circle. I have no idea what's going on, just like you were in the little circle a year ago and had no idea what's going on, call it transitory, and look down at everyone that said it's not transitory and you're an idiot. The same thing is happening now. You just have to sit back. And the good news for you is if you're in cash, which you should be in most of the portfolios, we still have some stocks, because I could be 100% wrong. I've been wrong before. But just, you're going to have an opportunity where the Fed's going to say, okay, we have to stop and we have to just, wait for these to filter through over the next 6 months. I'm thinking that's going to be December because I'm thinking data is going to be the ugliest it's been in probably 20. You're going to see indicators hitting 20, 30-year lows that we haven't seen since we have interest rates, we haven't seen interest rates this high in a very, very long time. But it's going to provide lots of opportunities and great opportunities for you in the future, right? There's times to play defense, times to play offense. You have to play defense here. With the Fed, don't fight the Fed. Just don't fight the Fed. You can't fight the Fed. They control the world. They control the global economy. Right now, I mean, man, I'd love to tell you international stocks, and they've been getting wrecked much, much more than us in a lot of areas, especially in Europe, are buys. But again, with the Fed raising rates, you see things like, you saw with Europe, right? What are they doing? It's just
they're crazy
with the UK.
With energy,
with the UK.
Don't get me started on energy. I can't rant. Like, where podcast is going long, I can't rant. I want to, but you're right.
Yeah, but just you have things that they're doing, unconventional things that you've never seen before because nobody knows what's, these guys have absolutely no clue. It's just, you got to throw out the textbooks you read, everything you read, and that's what they're doing basically. But it's you're going totally opposite from everything that you learn. It's really scary right now. It really is scary that they're going to continue to raise rates at these levels. I can't believe it. I mean, you're seeing it across the board. You're seeing a lot of indicators. You have to have someone on there that has common sense that could see it. Even Buller, who said, again, he said with July meeting, we should go 100 basis points. We need to go higher and higher. Look, this is a month and a half ago. A month and a half. We need to go higher and higher and higher, crazy and high. Now he's like, whoa. We need to wait a month and a half later. A month and a half later, we're talking about Fed policy here, right? You need time. A month and a half later, this guy is just like totally different from what he said a month and a half ago. That's what we're seeing industry and industries from someone like me. I've been following this for a very, very long time. I've never seen demand destruction at this level happen this quickly, all controlled by the Fed. It's happening industry by industry. You and I listen to the conference calls. We're seeing the numbers come out every single day. It's someone's laying off this and removing their guidance and lowering earnings every single day. Every single day we're seeing that. And we're going to continue to see that for the rest of the year. With this earnings season is going to get very, very, very ugly. And hopefully they just, open their eyes a little bit, the Fed, and see what's going on out there. Because if you're looking at lagging indicators, those lagging indicators are finally going to catch up to you, like eventually, and you're going to see it. Hopefully don't wait too long because they're going to be in a lot of trouble. But again, it's going to create good buying opportunities. Hopefully sooner rather than later, we'll see. But be careful October. October could be a really, really, really dangerous month, man.